Yes, absolutely. The backdrop of the global economy is very much Goldilocks, and we have a spillover from 2019. Equities in that respect are the asset class of choice, backed by a reviving world economy, profit profits, and of course easy monetary policy. And then, of course, quite a bit of that courtesy of the U.S. elections in November. Now, the China coronavirus scare is certainly the topic of the day and weeks, and has a impact on markets, and it might be choppy short term, but that creates really buying opportunities, as I firmly expected by the end of the first quarter. This China health situation will be firmly under control and out of the news flow.
Right. You say global equities remain your choice, but where specifically when it comes to global equities? Because there are a fair few to choose from.
Well, I think clearly anything exposed to global trade, there is a temporary global trade truce due to U.S. elections and China buying time to strengthen their position. So that's positive. And then the news dominating China coronavirus scare clearly has an oversight impact on China, Hong Kong, Asia, and export-sensitive Europe. But that is of clearly temporary nature, and therefore I would use weakness today and the next weeks to buy China and Hong Kong stocks, and for that matter, of course, also Japan and ASEAN, because that's a great entry point again into a structural growth story which we have across Asia, and the emergence of affluence and middle classes, and that topic remains very much dominating.
You say the euro equities remain attractive. Where specifically across Europe then?
Well, it's quite interesting. Of course, export sensitive is interesting. But when I speak about the global economic cycle, we have sectors like oil super majors, which have great value and very high dividend yields in an ultra-low rate environment. And of course, cyclically, financials are benefiting, and industrials, which are also very cheaply valued. And then perhaps the wild card is the European luxury sector, which is suffering right now quite a bit due to this China situation, and of course the restriction of traveling and a negative impact on consumer confidence. But again, that will also be only a temporary situation.